Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. The month of June is certainly shaping up to be an incredibly lucrative month for commodity traders. In fact, it's fair to say that June is on track to be one of the most profitable months of 2021, packed with an endless flow of back-to-back trading opportunities. In fact, we took the opportunity on Friday to lock in another 1,000 points with our clients at the Gold and Silver Club across the industrial metals, which was in the matter of 24 hours, where we picked up several positions ahead of Thursday's CPI data. We had a big breakout to the upside following on from that news item, and we were able to bank just over 1,000 points in 24 hours with our clients. So of course, for every one lot that you would be trading, that's $10,000 of profit. For every 10 lots that you'd be trading, that's $100,000 of profit just within 24 hours. Now, earlier this month, US employment data that fell short of expectations for the second straight month. That followed on last week with the US inflation accelerating at its fastest pace in nearly 13 years. The consumer price index the Fed uses as its preferred measure of inflation, that jumped a sizzling 5% in May. That's its highest level since 2008. And meanwhile, core CPI data rose 3.8% year over year, which is the sharpest increase since 1992. The inflation reading that represents the biggest CPI gain since the 5.3 increase in August of 2008, just before the global financial crisis sent the US spiraling into the worst recession since the Great Depression. That's when oil prices skyrocketed to $150 a barrel. Now, the hot reading now positions next week's Federal Reserve meeting as one of the most highly anticipated economic events of the month that traders will not want to miss. So far this year, the Fed has maintained that inflation will run hotter than its traditional 2% goal for a longer period than estimated as the global economy reopens, but should prove temporary. However, traders, they're not convinced, and they believe that the Fed has unleashed a beast that they can no longer control. Just like the US, inflation is surging at a record pace across the world. China's inflation rate in May, that jumped an eye-catching 9% from an already high 6.8% a month earlier. Elsewhere, Canada's latest inflation reading hit 3.4%. That's the highest level in nearly a decade. Meanwhile, on the other side of the pond, UK inflation more than doubled to 1.5%, up from 0.7% the month earlier, whilst Eurozone inflation jumped 1.6%, up from 1.3% a month earlier. If you're wondering now just how high inflation could get, you only have to look at what's happening across the entire commodities complex. Last week, oil prices, they surged to their highest level since October 2008, with WTI hitting $70 a barrel, whilst Brent crude oil topped $72 a barrel. Oil prices, they're up 275% from this time 1 year ago. Elsewhere this month, many other commodities ranging from copper to palladium to iron ore, they have surged to all-time record highs, whilst lumber prices, they've quadrupled in the last 5 months, climbing over 500% from their 2020 lows. There are plenty of reasons why commodities are on the move, but the key driver is rising inflation, which has spurred significant demand for assets with inflation hedging capabilities. Whichever way you look at it, the case for commodities in a well-diversified portfolio has never been more obvious than it is right now. Extraordinary times, they do create extraordinary opportunities, and right now as traders, we are living in some of the most rewarding times ever in history. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. So copper is one market we identified with you the previous week, which we were looking to be a buyer on dips, and that's exactly what we did on Thursday with the CPI data. We took the opportunity on the dip to establish a further 2 positions there. We saw a 2% breakout to the upside on Friday to capitalize on and lock in profit. So we've seen some very quick turnaround there in the price action on copper on Thursday. I hope some of you were able to capitalize on that move. We'd come back into liquidity several times over the last week, but again, the catalyst for that, of course, being Thursday's CPI data, that provided an excellent opportunity to build further exposure to this market and capitalize again on the dips and the 2% breakout that we saw on Friday. Then moving over to silver, you can see several opportunities again to buy in nice and low over the last week. Lots of support coming in at that $27.50 per ounce handle. Multiple opportunities to add on those dips in the last week. In fact, we established another position on silver last week, which moved nicely into profit into the weekly close. Silver closing up 0.5% on the week there. We do continue to see slow and steady grind higher for silver prices. They breached back above $28 per ounce on Friday. We've had a little bit of a pullback into the close. We've also seen that on gold too, with the dollar, which rose to the upside, and 10-year yields also caught a bid on Friday. But ultimately, we want to stay long this market. Hedge funds and money managers, they've continued to increase their net longs again in the previous week. As you know, we've been building positions in silver over the last 3 months here, since we put in the lows at the end of March, beginning of April, and we've continued to add on dips here. So again, the last week was nothing more than a great opportunity again to add into the sell-offs that we got in the lead up to the CPI data. We had a decent breakout to the upside there on Friday, and silver has closed positive again on the week. Then moving over to gold here. So this is where things do get very interesting on gold. So you can see here we've had the typical post-European Central Bank sell-off on Thursday. This has faded a lot of traders again. And this comes back to our point that just outdated technical strategies in the market, indicators which will constantly give you delayed confirmations, mean a lot of traders keep on getting chopped up on gold and trapped into this sort of price action. So where you see a strong push into the close on Thursday after the CPI data and the European Central Bank data, you have to be very careful here on the metals such as gold. We've seen this so many times over this year where the move gets faded later on into the US session on the Friday after a European Central Bank announcement. So we actually waited for the dip lower that we got much later on in the session in order to add right at the daily lows there. And you can see that gold has had a decent push lower on Friday, whereas silver has closed positive for the week. Gold hasn't. What I would be looking at as we go into next week, more of this range bound price action, but just be aware that a lot of traders are getting chopped up a lot with this price action on gold right now. We're seeing a lot of resistance around 1900, support coming in at 1860 to 1870 at the moment. We mentioned previously to you that platinum is normally vulnerable over the months of May and into June, so you wanted to look out at these sell-offs as opportunities to build positions at lower prices, which is exactly what we've done here on platinum in the last week as well. So overall, if you've been patient and waiting for these sell-offs, it gives you a great opportunity to build your positions out at much lower prices rather than FOMO in and catch the price at the very top. You want to be buying at the dips here, especially as we've broken down on platinum back towards 2-month lows here. So certainly this is back at the swing lows that were tested again going back to March, favorable levels where we have been building positions. Palladium is another metal where we've capitalized several times over the last couple of weeks here, initially banking 3,300 points profit, and then again last week banking 840 points profit. So in total over the last couple of weeks, that's 4,000 points banked on palladium. So of course, as you know, for every one lot that you'll be trading, that's $40,000 of profit. For every 10 lots that you'll be trading, that's $400,000 of profit on this market. It's been fantastic to capitalize on this volatility, and again on the dips that we had in the lead up to Thursday's CPI data, that gave us a great opportunity there to buy in on the dips and then capitalize on the breakout that we had later on in the session and into Friday's US session as well. So essentially, many metals right now, they have given quick opportunities over the last week. Again, if you're quick, you're nimble, buying in at the right prices rather than getting triggered on false breakouts to the upside. You want to be patient, wait for those markets to come to you, wait for the dips in price action. The last week has been a perfect opportunity for you and ourselves and our clients at the Gold and Silver Club to add further exposure on many of the metals and commodities that are going to benefit massively from the commodity super cycle that we're in at the moment. These trading conditions are perfect right now. The volatility is exactly what we want to see as commodity traders here. And this is where we're seeing a lot of traders out there who are just using outdated technical strategies, gimmicky indicators that are just not working for them. They're constantly getting chopped up. They end up panic selling at the lows or FOMOing in at the highs, and essentially they're not making any money. So this is of course where you want to be utilizing a research-driven approach to the market where you're trading the same way that the professionals are, the hedge funds, money managers, the banks and institutions. You've got access to our in-house data and market intelligence. You're marrying that up with the capital flows in the market, the daily, the weekly, the monthly cycles, awareness of the major news items that have the biggest impact and what that impact is on the commodity markets we trade, and of course understand and be in sync with the positions from the bigger institutions, hedge funds and money managers, and that will help you massively to get an edge in the markets. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars, access to our real-time trade ideas, as well as institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.